Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. I guess it's been that type of day. I think it started off that way. Came in, futures were down 10, 12 handles. I'm like, oh my goodness. You know, all the bulls that had some confidence bred into them yesterday when we, went down into the gap and held, we have to deal with another day. But meanwhile, it wasn't so difficult. The market came in, we broke below yesterday's low in the spiders. We held above the 200-day. We held above, the 50% area in that gap that we talked about even the prior day. And then once we went back above that 126.71, that's your buy price. And then you put a stop on it at the low of the day. If all you're doing it is a day trade with 30 cents risk, you could have made a lot of money in the spiders. So if you look here at the chart, I'll show you exactly what I'm talking about. So today, if you take a closer look, you have this little range here. Okay, you have the range that we've been creating ever since we started this year. Obviously, starting last year, we broke above this downtrend, holding in here, holding higher. Then you had that gap up. That wasn't that impressive on the first day of the year. And now we've been consolidating well, putting in a lot of time above this 200-day, which is the line that I drew that I said I would like to see hold. Well, we held higher. So we went below 126.71 and back above it with the low being 126.40. So right there, once it recrossed, that's your signal to buy that we're holding in there. So if you bought 126.71, all you did is have a 30-cent stop, and we closed at 128. So you made $1.30 with 30-cent risk if you were just treating it as a day trade. If you were long, like some of us were, including myself, into today, you were able to trade around it, and now we closed right back at the highs of that first day of the year. The question is, tomorrow, what takes place? So now I'm not one to take a lot of risk into a big jobs number. Traders are risk averse. You don't have to do it. Unfortunately, a lot of these charts look really good. And in order to be involved in what could be a good number, you have to take some risk. And I've been taking some risk, since December 20th gap and go. I've been trying to be net long, holding 4 to 7 positions. So I'm going to stay the course until it changes. If we get a bad jobs number, it's going to hurt. So I'm in like a tier 1 across the board with about 8 or 9 positions. I see a lot of charts that look good. So it's telling me that we should continue higher. We've had some bad news we've absorbed. We've had some, today's economic news was pretty good. We have the euro breaking lower, taking that in stride. So all in all, I'm acting as if I'm a macro investor and I'm just trading around it. And hopefully some of you guys are doing the same thing because we've held a lot of winners for, a long time. So anyway, the chart of the S&P looks good. Big jobs number tomorrow will tell us which way we go. As far as stocks are concerned in tech, Apple has been awesome. Been trying to hold this thing with you guys ever since we broke above this this little trend line here, which was about 395. We did enter on that gap and go. You remember the gap and go around 388 we bought, and then it had that retest of the 50-day, so you could have bought that dip. And ever since, it's methodically moved up very well, giving us a nice trade into the gap. And then yesterday was the gap fill, and then today it extended. And now here we are, close to these, the highs. So again, island top negated, on the move. We'll see how we handle this area. For a short term, it's definitely, a bit extended, not tremendous, but a bit. So into a big number, if you're risk averse, you probably need to be small. I am small. It's on the virtual trade floor. I'm not in anything more than, a tier 1 type of scenario. As far as Google, got a little, I would say a little lucky, but the buy price on Google was 630 to 636. We bought that dip, remember, 636 on the virtual trade floor, held it for about 30 points. I did say that's enough for me because it's very wide. I'm going to wait, to buy a dip, and then today it was downgraded. Everyone's like, Redler, when are you buying it back? If you look at the chart here, I'm going to buy Google back. I think it's fine. If you look at the chart from where I put the low in over here to this nice channel that we played a few times, and here was your buy price right here. So I did sell it on this day, okay, and now it came back in. It broke that 660 we were talking about, and I would like to buy this Google back somewhere around here if I can, which is close to this gap. I think it maybe tests it, it does something, and then I think it'll be buyable. But for right now, I didn't rush to buy it because it was the first day down, but I do think you'll be able to get an entry somewhere around this 652. And if you buy it at 652, you just save yourself 20 points. And I could do it because I'm actively trading. If you're a macro investor and you did buy here, or you bought when it broke around this area above 600, just stay the course. I think the stock has a lot of higher prices in it, for the year. As far as like the monthly chart, looks tremendous. It's just starting to break above this big trend line. I'd love to see it hold, so it stays intact. And then you have the 750 back from 2007, which I think it could get above. So anyway, that's Apple and Google. As far as Baidu, not much to show you. It's still in this flag, a little bit frustrating, but it's taking its time. Amazon, not really much going on there. It still can't really get going. And, at this point, I'm thinking more bearish than bullish, but, it's hanging around here. It's still, here's that reversal. Here's where it broke above this descending channel. So I'd like to see it start to get up, get to 190, 195, and then figure that out. So I'm trying to see if we could try and trade it long until then. But right now, it's still showing some relative weakness. It might take earnings, which, will be tough to wait for. As far as Netflix today, choppy action. It was up 10% yesterday. It gave me a trade above yesterday's high, but it was quick. It wasn't like yesterday, but it was pretty much a scalper's dream today if you wanted to do that. I was in it a few times. I'm not in it this second, but I do think that as long as it continues to hold the top, that moving average there, and at least the top third of this range, that there will be a point where it tries to get into this gap, and it could see 100 and change. So for those of you who are staying with it and trailing it, I would say as long as it stays above 75-ish, it's fine. And if it goes sideways and hangs out another day or so, it could be buyable above 81.5 for a continuation move. It's not going to get back to where it was, guys. It's not getting back to the trees of this area, but for a bottom feeder type trade, I think we can make 20-25% if you're a macro investor. If you're a trader, just keep it on the radar because it does have some nice spurts. As far as some mega cap stocks, looking pretty good. Remember we talked about Microsoft 3 days ago, and pretty big move for Microsoft. Look at that. I haven't seen that in a while. It's hard to obviously chase it now, but yeah, 3 big days in Microsoft coming up to this area. So that looks pretty good. I did start nibbling on Cisco. Different story here, obviously. But if you look, it's looking okay as far as hanging around. It's above the moving averages. If it can get going above 19, maybe it tries to fill this gap and heads to the 21 area. Stock's been acting well ever since it put in this capitulation low. So I think it's worth a small look. Intel hanging around, almost, wow, look at that, almost back to the highs. So it absorbed that move, or it absorbed the disappointing earnings or earnings pre-announcement. So all in all, still looks good. At some point, it should take this out. The ags, we talked about it today. Monsanto, Mosaic had news that didn't look great, but it wound up ignoring it like these ags always do. So if you look here at Mosaic, it did push above this resistance, and it was a quick trade. Don't like the fact that it came back below it, but I do think it's fine. The MOO, as far as the ETF, looking good. Remember, we talked about it once it broke this downtrend. We would like to see it, hold above the moving averages, and it's working its way higher, so that looks all right. But obviously, the banks were the story today. And the banks led the way since last Thursday. You've seen JP Morgan on on my virtual trade floor. So I've been trying to hold it for everyone. I like the pattern. So I think a lot of you guys were thanking me that I stayed with it for more than just a day or two. It's been, 3 or 4. You've been able to buy every down open with this thing. And this was a nice move. I bought it here because it was flagging above the moving averages. And now this has been a nice percentage. Nice percentage move in this JP Morgan. It's got some room to go. At this point, I don't think you could be really big in it, but I think that it's good for the market, and we'll test this 36.90. Today, Bank of America was a story. Wow, look at that squeeze. Really nice extension today. I was long this one too, and I unfortunately sold it out of boredom, which percentage-wise, it was a nice little area. And I think there's talk about the governmental refinance or the blanket refinance, which they came out and said that they're not doing after the close. So maybe it'll cause a little weakness in Bank of America, but we'll see how much of today's it holds. But either way, good little move, or a good big move for this stock that people have been trapped in. Goldman Sachs has been a little wishy-washy. Unfortunately, traders like to trade Goldman Sachs because it used to move and it's been lagging. I don't know what's wrong with this thing. If you take a look at the chart here, it's just really not, compared to what I just showed you with Bank of America breaking up or JP Morgan, testing resistance. JP Morgan is testing this area that Goldman was at the last time the banks rallied. So last time the banks rallied, Goldman went to 115. So if you look at this day, okay, this day was just say what? late October. So let's take a quick look. October, this was 115. In October, JP Morgan was as high as, what is that, 37.54. So JP Morgan is almost back at that high. So if Goldman was in line and showing the same type of action, it would be up here. So I don't know what that means. I don't know if something's wrong. So I'm keeping it light. If it were to start breaking above this 96.50 or this downtrend, perhaps it plays catch up quick, or maybe there's something coming out. Well, we shall see. But at this point, Wells Fargo's acting better, JP Morgan's acting better, some of the regionals are acting well. So that's pretty healthy. The OAHs are kind of putting themselves together still. Looks okay here. This is this descending channel that it's still in, which is also the right shoulder of this inverted head and shoulders pattern that I've talked about. I did get stopped out on this day, but I got back involved in here. If we start getting above 119.50, this would probably be an area to get a little bit more, and then we'll see how it handles this descending trend line. Not acting great, but it's okay. The XLE is actually acting a lot better. It's already above that downtrend and holding above it. So this is showing more relative strength versus the OAHs. So this is probably a better place to be. So I don't even know why I'm not there. But anyway, we'll see. As far as some other charts that I like, look at this HOG. I'm not long it, but I'm hoping that perhaps I can get involved at some point. Nice little chart, closed near the highs. It's got a pretty big resistance area that it could break above. This HOG hog for all of you motorcyclists out there. Looks pretty good. Coach, we talked about today, also coming into a really, really tight area. So to me, I'm long some. And just in case we gap up tomorrow, if we don't, I'll be looking for it to see if it could break above this 62. This looks nice here. So overall, a lot of nice patterns. And unfortunately, they're all coming in coiled a day in front of a big jobs number. Lately, the jobs information has been better than expected. So if the market has some bigger expectations, so hopefully it doesn't disappoint. And if it does, we'll have to see what we could trade out of, see where there's relative strength. But at this point, I'm in a tier one. You see the positions up there. I'm not uncomfortable, but it's a little bit out of my risk parameters. So hopefully, we keep this momentum to the upside, because the charts are telling me that there is money being put to work. So until that changes, I'm going to stay the course, and I'm going to help you guys do it as well. It's been Scott Redler, T3 Live, the recap. See you at the morning call. Have a great night.